The Bible says, be not deceived. Whatsoever a man soweth, that shall he also reap.
All right, it's 4 p.m. on Wall Street. Do you know where your money is?
How much should I invest?
I really looking for some direction.
Should I hold on to my house as an investment for my future?
What should we do to have money that we're putting aside?
Welcome to Financial Issues, where we align reality with truth. Conservative talk radio you can count on. Financial issues that you need to know.
We face a disintegrating economy, a weakened defense, and an energy policy based on the sharing of scarcity. We will simply apply to government the common sense that we all use in our daily lives.
Now, here's your host, Dan Celia.
Good morning. Welcome back to Financial Issues. I'm Dan Celia. It's great to be here. You can queue your call up if you'd like at 866-300-9298. We will take calls, but we've got some pretty important economic data. It's always good. Well, it's not always good. It's always good for me to get data, economic data, that confirms what I've been talking about and warning people about for a long time. And I think we got some of that this morning. And very, very interesting. Now, does it really confirm what I am saying, or am I making it confirm? Because I've been accused of that. No. Look, I'm not making it confirm. It is what it is. The numbers are what they are. I do have a little bit more of an instinct or a desire to read between the lines and go a little bit deeper than what the headline is. So I'm going to talk a little bit about that. The first thing that we got out this morning were ADP, private sector jobs. Remember, Friday's the big day. Friday's the day we get our government job hires, how many people we hired in the economy. By the government will come out. We'll get a new unemployment rate, maybe, or it'll stay the same. It's looking like it may go up. At least that's what most economists expected. Most economists are expecting about 245,000 new jobs coming out on Friday. They've lowered that to 210 pretty much after the ADP number. The ADP number came out, and that was 179. So according to ADP, the month of May, we've added 179 private sector jobs. Now, the ADP number, and I know you know this, I've said it before, does not include government jobs. It only includes those private sector jobs. So the Friday's number will be, I guess you could say, a more inclusive job numbers, where it's going to include, obviously, the government. Now, that doesn't mean federal government. That it does mean that, but it also means all the local governments, whether it be in your municipality, maybe it's your sewer authority kinds of jobs, water authority, so on and so forth, county jobs, state jobs. So it includes all of those. So we'll see what that number looks like. When the number came out, before the number came out, the Dow index was in negative territory and went even further. The futures went lower on the job numbers. And then we get two very important numbers. I told you about it on Monday. These were numbers that I am concerned about. By the way, 866-300-9298. I know you've got a financial question about your personal portfolio. I know you've got a financial question, maybe about the economy and understanding some of this, what's going on in the economy and the numbers, and we can talk about that, 866-300-9298. So we get U.S. productivity. Productivity number came out for the first quarter. Wait a minute. Let me just tell you what the headline is. The headline, and variations of this, but this is generally what all the headlines say. U.S. productivity falls 3.2% in a brutally cold first quarter. Still a weather issue, of course. I know some of it is weather. I'm not discounting that totally. But that's the headline. Falls 3.2%. Now, I don't know how many of you are going to remember this. I know one person did, because now he happens to be a friend who texted me this morning and said, you have been waiting for this drop in productivity. You called it 2 years ago. No, what I said 2 years ago was this. We cannot continue to see wages of individual workers continue to go down and maintain the same productivity levels. But here's the real reason. The real reason productivity went down is because they were producing less goods. In other words, they maintained the payrolls they could maintain while reducing, slowing down the lines, so to speak. Reducing, whatever they produce, reducing the amount of products they produce. So it is going down. Why do they reduce it? Well, they reduce it because nobody is buying it, whatever it is. Productivity's down because there was no need to increase productivity because the so-called recovery is not recovering enough in that people have more discretionary income or that companies are in fact ready to expand their plants, their lines, build additions, whatever it might be. So a 3.2 decline in productivity is not good news. That is one of the underliers of the economy. Output for goods and services dropped. Output 1.1%, decreased 1.1%. Unit labor cost, of course, jumped 5.7%. Doesn't mean that employees are making more or anything like that. It just means that I'm producing less goods with the same amount of payroll. Obviously, per unit, it is costing more to produce that good. And that's what that means. 5.7% is a very large jump. Very large jump. Hourly wages, pretty much unchanged. 0.4%. Hourly wages, unchanged. And that 0.4% is when it is adjusted for inflation, because I'm not even talking about any other numbers, because we have to adjust it for the inflation. Now, that is if you believe the inflation rate that is out there, right? If you believe it. I don't. So I think it's more of a wage increase that isn't an increase at all. I believe it's still negative, because I believe at least 0.4, 0.5, 0.6 is getting eaten up, not only by real inflation, the kind of inflation that includes silly things like energy, like gasoline, like food, just silly things. So when you throw all those things in there, we still are at a negative wage growth, in my opinion. Nobody else is talking about that, but in my opinion. I happen to think I'm right on that. As a matter of fact, I happen to know that I'm right on that. U.S. trade deficit, another issue, underlier, jumps deficit 6.9%. I should have sent Devin an email this morning and asked him to find the clip. He would have found it. I didn't think of it till right this moment. Of President Obama about, I'm going to say it was 2.5 years ago or so, talking about one of his goals of increasing exports. That he went on to talk about how his goal is to see or wipe out our deficit. Well, it's at a 2-year high, Mr. President. Or I'm just going to say it's at an all-time high since you said that, because I'm assuming he said that about 2 years ago. Maybe it was 2.5 years ago or so. But it is 40. The gap widened to $47.2 billion. That is much higher than the forecast of $41 billion. Yeah, just $6 billion higher. Just missed it by a hair. Anyway, huge difference. That should be a problem. The spike in imports that we are seeing, in other words, we're importing more than we are exporting, also reflects on the fact that you've got a very sluggish economy in the Eurozone. But it's very interesting when you read the details of the report. It says that the import number suggests Americans, listen to this, suggests that Americans are more confident about the economy, thus more willing to spend. That is not the case at all. As a matter of fact, it's not even close to being accurate. It means that the American consumers continue to spend out of necessity because we depend upon staples, things that we need. We depend on them being imports. So it doesn't mean that we're more confident. It means that we have less choice than do maybe some of the European nations. That's what it means. And they ought to say it that way. But to make it sound like our economy and confidence is better than it is in the Eurozone is lunacy, and it's not accurate. Now, when we look at the productivity rate falling 3.2%, and we look at the deficit jumping 7%, 6.9%, what does that mean? What do you think that means? What is the big number coming out in another week or two? The third look at GDP. You can almost count on now. This should have some reaction in the markets over the next week or so. Probably won't. But it has to mean that we're going to look at, that negative 1% in our GDP growth for the first quarter. It means that it is likely to even be even further negative, or at least stay the same, stay negative. And if it now, based on this news, if it goes positive, then I got a real problem with that, big time problem. Remember, I told you about the phone conversation that the president was likely having with the Commerce Department the last time we got the second look at the GDP number. It was make-believe, folks. I wasn't really saying there was a phone conversation. But I was saying I suspect there's a conversation going on with the Secretary of Commerce right now saying, hey, man, we got to, you got to do something about this GDP thing, right? We're concerned about winning back the Senate in 2014. Got to help me out here. So I'm not saying that happening, but do you believe that, you know that it isn't? Anyway. Interesting, too, this morning, as soon as the ADP number came out, forget the productivity numbers and the trade deficit. As soon as the ADP number came out, Treasuries bond prices went up. That would mean that there was some anticipation of a flow into bonds, and there was probably an actual or reality of buy buttons being pushed. There were probably traders around the nation that already had queued up buying into the bonds and then clicked the mouse once they saw it to go ahead and buy. That would indicate that there are a lot of traders now believing that maybe this weakness in the economy is real and is questionable and is something we've got to be concerned about. Fed president from the Dallas Fed, Fisher. Richard Fisher is my favorite Fed president. I wish he would run for president of the United States. Not ever going to happen, but I wish he would. But anyway, he's one of the few that I really have a lot of respect for. And Fisher says the central bank's bond buying program, quantitative easing, is on schedule and in fact should end in October. And he also said that he does not expect to see any rate hikes this year. I would certainly agree with that. I said the middle of 2015. I'm starting to question that. I think we could go all the way through 2015, and I wouldn't be surprised if by 2015 we start another round of quantitative easing, because I think the economy is going to start to turn in a big way. Is it because of the lack of quantitative easing? We don't know that. The Eurozone business activity fell sharply in May. Why do we care about that? Because we ought to care about that. We live in a global economy, that is going to dramatically impact us. Global inflation rose. According to the Organization for Economic Cooperation and Development, inflation rose to 2.8% globally among the 34 developed nations. Financial issues. I'm Dan Celia. We'll be right back.
I'm a widow. I've worked for a bank for 31 years, and I've been retired now for 10 years.
Myrtle Norris comments on her experience with the AFA Foundation.
I had a lot of financial questions, and Dan Celia he answered my questions, and he helped me with a lot of decisions that I made. And then the charitable gift came up, and he explained that to me. And so I contacted Diane O'Neill, and she walked me through everything that I needed. I decided to get it, and I'm sure glad I did, because I know now that money is in a place that I know God wants it to be, and also get my monthly income from it. I believe in the AFA and what they're doing, because they're working for us.
Learn how the AFA Foundation can work for you by calling 800-326-4543 extension 345 or visit afafoundation.net.
Good morning. Welcome back to Financial Issues. I'm Dan Celia, American Family Radio Network. It's great to be here. We are going to get to phones, 866-300-9298. Let me just give you an up down on commodities, and we'll move on to the phones. Right now, we've got oil up over 103 a barrel, 103.29. By the way, it's moving. It is on its way up further. Natural gas at 460. We have positive movement in gold for the first time in a while. The dollar is stronger, so that's a little bit odd. But anyway, gold is at $12.47. Silver is at $18.81. And all the agricultural commodities right now are in positive territory. The biggest mover right now would be wheat. Wheat is up just over 0.75%. So all the agricultural commodities in positive territory. Let's see. That's it. The indices right now are in negative territory. The futures, we'll see how they open in a little bit. 866-300-9298. Let me go to Jim. Jim calling us from Florida. Hey, Jim.
Hi, Dan. Thanks for taking my call.
Sure.
I have a question. My dad recently passed away and left my mother an IRA that was in an insurance company in like a mutual fund, and there is a fee, a yearly fee of 1% that somehow guarantees a 6% return. And quite frankly, I sat with the agent and my mom, and it made no sense at all to me.
Mm-hmm.
Just want to have some advice on what she should do to preserve that capital.
Well, here's a...
Go ahead, please.
So here's what I would say to you, Jim. So it's in an annuity of some sort. It is not guaranteeing 6%. So, if you told me they were guaranteeing 2%, I'd say possibly. It's not guaranteeing 6%. So now, if it's guaranteeing a 6%, it's guaranteeing a 6% on whatever is left in the account at the end of the year. So the account may go down 15%, but you'll still get your 6% on the lower number. So it could be something like that, which basically they're going to just take it right off the top. So I would say this to you, Jim. Don't forget about trying to understand it or getting a lot of explanations and all that, because I can't even track sometimes with these guys. So listen, what you want to do is you very simply, Jim, you want to go and you want to say this to the agent, you and your mom or whatever, and just say, look, I got X amount of dollars in this thing right now. So I'm calling this my principal. This is my principal. So let's say it's $50,000. I got $50,000 in this account. Can you put in writing before I yank it out? And by the way, there should not be any surrender charges to get out of that, because after a death, the money should be able to move without any surrender charges. So I want to know in writing. I want to have in writing. My $50,000 is going to get 6%. Okay, so my $50,000 is going to get 6% this year. Once my $50,000 gets well, let's do 100,000 just to make my math easy. So my $100,000 is going to get 6%. At the end of this year, I will have $106,000. That $106,000 is now my new principal, right? Going into 2015. Am I getting 6% again on $106,000? And is that the way it's going to continue? And I have no risk of losing any of my principal. And if he says yes, say I would like that in writing. He will say no, I can't put it in writing. And I'll give you 1,000 reasons why. But if it's a guarantee, why wouldn't you put it in writing? Well, we've got rules and regulations. No, there is no rules and regulations against that. I know the rules and regulations and the laws. You certainly can put that in writing if, in fact, it is a guarantee. So is it a guarantee or isn't it? Am I going to maintain my principal and my principal going to compound every year by 6%? If he says yes and puts it in writing, I'd like to know about it, know about the product, because that's a great deal. Not going to happen. And I think that alone is going to be able to give you the insights that you need, that this is not what it appears to be. And that's the problem that I have with these. If they were sold honestly and in a way that pointed out all the downside, upside, and what could happen, instead of what the appearance of them is. This is called interest rate selling. I would suggest that the 6% could possibly be guaranteed for 1 year, maybe even 2 years. Now, I hope he didn't move the IRA annuity into a new IRA annuity. I hope he didn't do that. Because if he did that, then the surrender charges are going to apply and you're going to be stuck there. So you find that out real easy by asking your mom if she signed anything. And hopefully that is not the case. If he did that, it means he got a brand new commission, huge commission, and the surrender charge clock started ticking over again. So, and if it just happened within 30 days, you can still get out of it because you have 30 days to get out of it. So I would move rather quickly. I would ask that question and think about getting out of there. Getting it out of there into what? I would suggest to you, Jim, that your mother would roll it over into a new rollover, a inherited rollover IRA account. That's a little bit different than just a rollover. She's not going to be able to contribute to it, obviously, but it's her money, it's her IRA account, and she's going to have to start withdrawing from that, like all IRA accounts, at your father's 70-and-a-half-year birthday, not hers. And she'll have to start taking minimum required distributions. So I would do all those things, and I think you'll be fine, Jim. Does that make sense?
It does. It does. Do you have a suggestion on what sort of what it should be put in? It's like a stock market kind of mutual fund now, which is scary to me.
Yeah, it's not even so. It is in a mutual fund, which there's no mutual fund in the country that will legally guarantee even 1%. So but so it's a mutual fund, but the mutual fund is inside this insurance product of an annuity. But anyway,
exactly.
If she doesn't want to have any risk, then I would suggest that she roll it over for now into, she's the options are, if she wants no risk at all, are going to be a CD or, money market account, something like that. But I would rather see her, and you can help her out with this, put it into an account that is can give her the protection of CDs and money market account with maybe 60% of the money. How old is she, Jim?
She's 74.
Okay. All right. Forget what I was going to say. Yeah. So I think she needs to roll it over into a bank IRA account that is going to be in CDs or a money market account. She can't have it all. Now, make sure she doesn't put it all in CDs because she's got to take withdrawals. And, so she's got to have some in money market and cash so she can make that withdrawal without having to go into the CD.
Got it. Yeah. The only problem is she loves the insurance agent. He's such a nice guy.
Well, I'm sure he is a nice guy, but you know what? I'm not saying anything bad about him. I don't know him well, but I would say, it doesn't matter. She's got to do what's right. She's got to protect.
Exactly.
You got to say to her, Mom, the last thing you want to do is outlive this money. You got to make sure that money's going to be there. You may even want to talk to her about if she needs extra income, carving off a piece of it, maybe even doing something like a charitable gift annuity so that she can generate a little bit extra income. But I would call me back if you have questions. But, she can tell the insurance guy that she loves him, but she's moving the money.
Very good. Thank you so much.
All right, Jim. I sure appreciate it. Thank you for the call. Let me go to Carlos. Carlos calling us from Ohio. Hey, Carlos.
Hey, how you doing, Dan? I love your show, man.
Thank you, brother.
And I'm praying that God will continue to encourage you and strengthen you in your faith daily. Now, I have a question concerning a law that is going to be released July 1st.
Yes.
It's something called the HR 2487. What is that all about?
Well, it's a bill that encompasses a lot of different things. Some of the things that it talks about in there, and the part that has got people very concerned and riled up only because there have been bloggers and people out there that have they either just love scaring everybody, or they're profiting from it in some way, shape, or form. Talking about some of the banking fees and banking institution regulations. And they're saying it's going to have a dramatic impact on the economy and collapse. First of all, let me say this to everybody listening. If it was going to collapse the economy would have already collapsed. Does everybody really think that people are just going to hang out and wait till July 1st till it collapses? Or do you think everybody be pulling all their money out and having a run on banks, and this thing would, it's kind of ridiculous. Trust me, every trader and everybody in the financial sector know this bill by now, and they understand it. The average person is not going to get impacted by this bill. If there are certain things in the bill that finally do get initiated, then it could have some minor impact on the average depositor or user of a bank. But, that remains to be seen. But it's, hopefully there's going to be some options for that if it does. And if there are no options, it's kind of irrelevant, because the only thing we could do is try to hope that the next Congress would revise it not to include some of these things that are going to hurt the economy. But it's not something we need to worry about right now.
I really appreciate your answer. And God bless you, bro.
Thank you, Carlos. And thank you for your prayers, man. I really appreciate it. 866-300-9298. Do we have time? Yeah, let me go to Fred. Fred's calling us from Alabama. Hey, Fred.
Yes, sir. Thank you for your show and your work. I want to ask you a question about all this is under an IRA, and I'm 74, so will be next week. So it's an RMD situation. Okay. Mm-hmm. I've got about between 185 and 195 in a mutual fund IRA. I won't tell you the name of the company because I don't think I'm supposed to. Mm-hmm. My question is, and what Jim called up earlier about confused me a little bit because it has something to do with it, which I thought of myself. Can I roll this mutual fund over, which is an RMD situation, into an annuity without being a mutual fund to protect it from going down?
Mm-hmm. You can roll it over into a IRA annuity. So it's what is called a qualified annuity. And you can roll it into a qualified annuity. You'll still be subject to the RMD. You can't avoid that.
That's
yeah.
Okay.
Yeah. But you can roll it over to a qualified IRA. Yes, you could do that.
But it can be an annuity.
It can be, yes, as long as it's a qualified annuity, you can do that.
But I don't have to leave it. I don't have to leave it in the stock though, in a mutual fund. I can just transfer it to a cash annuity IRA.
Yeah. Now, if you're talking about a commercial annuity, right? Insurance company annuity.
Yes.
Yeah. I mean, you would transfer that over into that qualified annuity, and it can be obviously, if it is in any kind of stock or bonds, then it's not guaranteeing that the principal is going to go down, because that's virtually impossible. So you would
a guarantee rate.
You have a guaranteed rate is different than a guarantee on your principal. A guaranteed rate may be a guaranteed rate. That's great, but on what is the question? On my principal year in and year out, with my principal never going down, or is my principal subject to going down? And yes, if you're guaranteed whatever you're guaranteed, you may get it on a lower amount next year than you got it on this year.
Well, I've had another annuity for about 5 years, and every year I get the rate on the principal.
Mm-hmm. And that's all that matters. So that's not going to have exposure to the market. That's called a fixed annuity. And even that, some of them still have volatility in them. A lot of them, most of them, frankly, but some don't. But I would just make sure that you understand that whether your principal is going to continue to stay the same and the interest rate you're guaranteed is going to compound on that principal every year. Make sure you understand that. So then your only risk is the risk of the insurance company. Because there are no, FDIC insurance or anything like that. So then your risk is the insurance company being, surviving during a severe downturn.
Okay, the other part of that is that now this is an RMD situation. So can you have an annuity that's an RMD situation?
You should be able to do it as long as they. So if your RMD, which I'm sure it is less than 10% of the principal every year, then all annuities allow you to withdraw 10% a year without any surrender charges. So it shouldn't be an issue for that at all. I mean, you want to ask the question, certainly, but it shouldn't be a problem. Okay? Thank you, Fred. I appreciate the call. 866-300-9298. We'll be right back. Hi, this is Dan Celia for Financial Issues. We live in some volatile times, and one of the things that we should be concerned about are the investments that I'm in honoring the Lord. Well, I try to do the best I can to make sure that the stocks and mutual funds on my list are the best out there, not only from a financial and fundamental standpoint, but that they wouldn't be displeasing to God. Would you consider being a partner with me at Financial Issues? For $85 a year, you're not only going to get my stock picks that I update every week, every Monday, and my economic commentary every Monday, along with an alert system and my asset allocation models that change as the economy changes, so that you can do a great job reviewing and maybe actively managing your portfolios. FinancialIssues.org to partner with me in the ministry.
I'm considering consolidating my student loans. Should I expect the interest rate to be lower than, say, what it is now? I got these loans in like 96. Is that all that I should consider, just the interest rate itself?
It depends. The ideal situation would be if you're going to consolidate by getting, if you had a home equity loan or something like that and paying them off, that would be the best scenario. Are there going to be fees associated with that consolidation? You've got to factor that in, along with the interest rate.
I'm a many-time listener to you. You are providing sound financial background to people who maybe don't have access to it.
The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back, Financial Issues. I'm Dan Celia, American Family Radio Network. Folks, I just want to remind all of you, and if you have not, listen, if you can spare a few days to get to the Tupelo, Mississippi area to help with 8 Days of Hope. I had Steve Tiber on the program yesterday. Steve giving us some information about what an incredible ministry this is, and most of you have heard it over the years. He's expecting 3,000 volunteers, and we're asking that you might be one of them. Would you volunteer? All you got to do is get there. Your meals are going to be paid for. Tools will be there. They're going to rebuild and repair homes. And we'd love to see as many of you out there. It's from July 12th to the 19th. So if you can come out for a few days, if you can come out for the whole week, bring your whole family. Put everybody to work. It's a great opportunity to be incredible witnesses for Jesus Christ. It's an incredible testimony to your relationship and walk with Jesus Christ. Not to mention, most importantly of all, not only will you be rebuilding and repairing, you're going to have opportunities to share the light and the gospel of Jesus Christ and to give people hope. You know, we need, particularly people that have lost everything, to know that there are people out there, followers of Jesus Christ, that can bring hope into their lives. So if you're a carpenter, plumber, electrician, drywall finisher, laborer, painter, whatever you can do, we sure would appreciate it. And here's what you need to do. Go to 8daysofhope.com. 8daysofhope.com. You can either write out 8 or use the number 8. 8daysofhope.com and get information about it. And it's from July 12th to July 19th. I hope you'll get out and help out there. 866-300-9298, 866-300-9298. Right now, all the major indices in negative territory, by the way. The Dow's down 42. So we're seeing a pullback, and they're citing primarily the ADP report. Not real excited about the job numbers. They were expecting something much higher. Probably now a little bit negative, a little bit concerned about Friday's number. I only care about one thing on Friday. I'm going to care about the labor participation rate. Listen, if we create 250,000 jobs on Friday, if that's what they say we create, it's going to mean nothing to me. I'll just tell you up front, not that I just want to, but we got to see a trend of that for about 6 months before it means anything. Because, despite what so many are saying right now, economists saying, well, 200,000 is a good number. Based on, this is not what they're saying, this is me, based on the new normal that this administration has created, or I want to say this Washington, D.C. has created, based on the new normal, this is a good number. Sure, it's a good number. Sure, it's a great number. If you're okay with 14, 15 million people not participating in the labor workforce, if you're okay with that, then okay, it's not a bad number. I have a problem with that. I'm not okay with 48% of the American people dependent upon the government to sustain them. I'm not okay with that. I'm not okay with that. And neither should we. That's not a working America. That's a socialist country. It's not a working America. So we got to look at the labor participation rate very, very hard. We've got to see what the unemployment rate looks like. The unemployment rate should be going up, not down, as people come into the labor participation rate. We should expect to see the unemployment number go up. That is a good thing, not a bad thing, but we're not seeing it. Discouraged workers are still strong. So that's got to have some people concerned for Friday. Do you know half of Americans, new report out by a recent survey from the National Association of Realtors, the chief economist from the National Association of Realtors is telling us that 52% of Americans right now have to make at least one major sacrifice in order to cover their mortgage, and that has been the trend for the last 3 years. Now, it's a major sacrifice. It doesn't mean it's like I can't go out to dinner this week. That's not what they're talking about. They're talking about big ticket items. They have to hold off on buying a car. They're not putting tires on the car they have, so on and so forth. So that's huge. 52%. That's not the problem. The problem is, and I don't think anybody's going to cover the story on mainstream media, by the way, but the problem is not that it's up 52%. The problem is that it continues to go up. It is higher today than it was 2 years ago. That's the real problem. 866-300-9298, 866-300-9298. If you got a financial question, we'd love to hear from you. 866-300-9298. Let me go to Thomas. Thomas calling us from Texas. Hey, Thomas.
How you doing, Dave? How you
I'm
doing?
good.
Look, I really want to say I really appreciate your discipline to the Lord and letting Him use you to do what you do. You're a huge inspiration to me, and thank you so much. But my question is, I have a 401k through my work, and I started out on a 2040 through Fidelity.
Okay.
About a month and a half ago, maybe 2 months ago, I moved it over to 2050.
Okay.
And I haven't had my 401k very long, maybe about 2.5, 3 years now.
Mm-hmm.
But I feel like I'm doing pretty good. In that short time, I've got 11.5 in there, 11,500. I contribute 6%, and then my company matches 3%.
Mm-hmm.
But what I'm wondering is, I want to get up to a total of 12%. Would it be better to increase my 401k 3 more percent? 6%, or open up a Roth IRA at 6%.
Thomas, if I were you, and I love what you're doing, it's great. You're able to do that much. How old are you, Thomas?
35.
Yeah. Man, if you keep doing that, you'll be in great shape. I'm going to say 2 things to you. One is, yes, I would open a Roth IRA account. I would open a Roth IRA account maybe at a, like a TD Ameritrade or one of the brokerage companies and the reason I tell you that is for 2 things. One is you need to be putting some money in Roth, on the Roth side of things. I don't want you to stop your 6%, what you're doing. Keep doing that. But I would want to see if you're going to add to that, I would do it on the Roth side. And whatever account you set up, wherever you set it up, make it so that it systematically comes out of your checking account every payday, so that your check gets deposited and this 3% comes out every payday and goes into this new Roth IRA account. Now, the reason I say that is not only do you need some protection in your retirement money from taxes, but it also is going to give you more options. It's going to give you an opportunity to do some other things with your money for the long term that you can't do now. For instance, I'd like to see you have some energy positions, some positions in energy. Maybe it's, some Phillips 66 stock. Maybe it's some, ConocoPhillips stock, some oil, some refineries, things like that. And maybe an industrial, like an International Paper or something like that, that you can contribute to. So the way it would work, Thomas, is you would contribute to it every day. And by the way, it's going to all be biblically responsible. So you contribute to it every pay. And then I would say, like every other month, maybe even every quarter, it's going to build up, because that money that you contribute is just going to hang out in the money market account, in this brokerage account you have. So it's going to build up, and as it builds up, then I'd buy a few shares of a particular stock. The next quarter, I would buy a few shares of a different stock that you already have, and rotate through like that on a regular basis. And as you can increase that 3% to 4% to 5%, do it. And if you do that at 35, if you do that from now until the time you're 65, I wouldn't be surprised if you end up with more in your Roth IRA account than you do in your 401k. So I think that would be a great strategy for you. The other thing that I would suggest to you is you have done pretty well. You've done very well. And I would suggest that your investments, your 2050 or 2040 fund that you have, did pretty well over the last 2 years or the time that you've been participating. But I would begin to think about right now getting a little bit more conservative. I wouldn't want you to go to a 2015 fund, but maybe pull back to a 20, I don't know, at least a 2030, maybe even a 2025 if they have it. They might not. But if a 2020, 2030 fund. And I would, and keep contributing the same amount. And I would probably do that for the next 12 months. Let's see what happens in the markets. That's going to help protect a little more of your principal. If the market crashes, it's still going to go down. But it's not going to go down as much. The 2050 fund, I'm just making this number up now. The 2050 fund may go down 25%. The 2020 fund, may only go down 15%. So it's going to protect a little bit more of your principal. And then when the market crashes, and you're still contributing, and it's sounding like by listening to me and whatever else you listen to or read, when it looks like it's bottomed out, then switch it back up into the 2050.
Okay.
All right, and I think that'd be a good strategy for you.
Should I? Okay. Whenever I get ready to do that, and I switch to the 2025 or the 2015, whatever they have, would it be okay to also increase maybe 1 or 2% my contribution, or go ahead and just continue that extra contribution to if I can do another 1 or 2%, just do it on the Roth side? No.
So let's say you want to do three more percent. I would do the 3% more in the Roth. Then let's say you get an increase, things are going good, you're getting more discretionary income, and you feel like you can do another 3. I would probably split it at that point. I'd put I would add to your 401k, I would add to your Roth. Same thing the following year or the year after that, as it increases. I would just look at splitting it.
Okay.
And I think that would make sense.
All right.
All right.
All right. Thank you so much, Dan.
Thank you, Thomas. Thank you for your encouraging words, too. I sure appreciate it, brother. Let me go to Michael. Michael's calling us from Texas. Hey, Michael.
Good morning, Dan. How are you?
I'm doing good, Michael.
Good. The job participation rate is really key when you start looking at the people that are retiring from the baby boomer generation. Mm-hmm. There's about 10,000 a day that are filing for Social Security out of the job market. That puts it about 280 to 300,000 jobs that are going that are being vacated, and these people are filing for Social Security. And so the 200 bar that the administration set is inept because we're going backwards about 100,000 jobs every time the job market comes out weekly. And that's unsustainable, especially because these people that are not in the job market aren't paying in the Social Security as the retirees are starting to draw out.
Yeah.
And that's a real key to our economy, and that's why these numbers are so important. If people start looking at them, they'll realize that we're at a negative, and we have to get up around 300,000 jobs just to break even.
Well, we actually have to do more than that, Michael, because the thing, and you're right about what you've said, but the other thing is that the government does not calculate into the job numbers is the population growth. So you've got, for instance, this month or last month, we had a couple 100,000 college students graduate going into the workforce. They're not counted, but they're looking to get in the workforce. We have high school graduates that are not looking to go to college. They're looking to get into the trades. They're looking to go right to work, maybe, in retail sector, whatever it is they might want to do. That's got to be factored in. So the biggest problem, one of the biggest mistakes that we continue to make when we calculate GDP, we don't calculate general population growth. And when population grows every year, means we've got to increase our GDP growth to make up for the population growth. We're not doing that. And we do the same thing with the job numbers. We're not calculating. So there may be 100,000 people last month going on Social Security early because they can't get a job anymore, but going on to Social Security, and there may be 200,000 kids graduating from college. So that even exacerbates the situation even more. So you're right on the money, Michael. And that's why these numbers are important. And I know, because everywhere I travel, when I do my town hall meetings, more and more people say they love it. You know, they didn't understand it at first. Now they're starting to get it. And it's going to make informed voters. Great stuff. Thank you, Michael. I appreciate you, brother. Financial Issues. I'm Dan Celia. It's great to be here. We are here every day helping you be the best steward you can be with all that God has given you.